to the same place as we started last Monday. Let's welcome Omar Najia, Global Head of Derivatives at BB Energy. Omar, a lot of noise about nothing in some regards. How are you guys dealing with a market like this, staying in the office but not staying in the market?
Yeah, I think basically, look, crude is a good each way bet. Either we go up, I mean, not new highs, but either we go and break this, from 85 where we are now, plus or minus about $110, 105, something like that, or we're basically gonna, go from here to about 70 something, 48, something like that, and then bounce a bit and then back down again and head towards the $60 kind of level. So, I mean, I know which I prefer. I prefer the market to bounce strongly because it would be a very decent sale. But I don't know which one it's going to do. I think on the balance of probability, we keep heading lower because I think there's so much selling interest, not selling. I think the selling that we're seeing now is just people liquidating positions as opposed to people going short. But for you to see like, a good opportunity, I think we'd need to be, $20 higher basically, or $15 higher, and then it'd be a good sale. But we no other kind of anything kind of smart, I don't think, to do right now. If it drops, I mean, we either want it to drop very hard, very quickly, then it would be a buy, or we need it to go up very strongly, and then it would be a sell. But right now, I don't know what to do. $70. Well, we sell it.
I know what to do. We'll go to Albert Stromquist, principal of Landstrom Advisors, sitting in China, the vessel of all wisdom. Albert, possibly the direction for Omar will come later in this week when President Xi meets President Putin for the first time since their bromance pre-Valentine's Day in February. The outcome, the optics of that meeting could give some direction as to where indeed all things Ukraine and Russia go. I suspect Vlad will be looking for permission to shock the oil markets to go dramatically higher and do what he's done in gas. What do you think is that meeting? What does it look like from a Chinese perspective?
Maybe something different, actually. Look, this is Xi Jinping's first trip outside of China since COVID in 2020, right? This is the Shanghai Forum. It's an association of Central Asian states plus Russia, China, and India. Right? And they will be looking at all issues economic focused around the Central Asian hub. Xi will be talking to Putin outside of the agenda of this meeting, but just his very presence at this conference in Samarkand in Uzbekistan sends a very loud message that all the stars are aligned for him in advance of the party conference in October. So I think that is the strongest message that China is taking away from his trip to Central Asia. He's also going to be talking about Indian relations as well, which, as you know, have been a mess for the past couple of weeks on the disputed border regions with some combat clashes again, and now separation of forces. So that's also an item on the agenda. And then, of course, gas supplies from Central Asia coming through the Turkmenistan route, Kazakhstan route. And also through the Power of Siberia route. So those will be touched on as well. Do I see a major impact from this conference on Russian, Uzbekistan, Ukraine activity? I really don't. I think that's going to emerge. If there's some major change, it will emerge over the coming weeks, but not as a major policy statement, I don't think, from this conference.
Let's welcome Matt Stanley, Partnerships Lead Middle East at Kepler. Matt, looking at the fundamentals of the market, again, where is Omar going to get direction from in order to place that bet? we saw, I mean, this is a market of counterintuitive realities. It seems that last week, an 8 million barrel lift in U.S. inventories and prices rose. I mean, where do the fundamentals sit in the context, you think, of giving this market direction?
Yeah, morning, Sean. Look, I can't disagree with Omar. I agree with him entirely in that prices could go up, but they could go down. I mean, that's.
You're all fired. Get on a different cast. Jesus Christ.
You're 22 years in the oil industry. It's like he switched the light on. Sorry.
It's like, sorry, I don't know anything. I don't know why I'm here. Maybe that's why Omar has 5 clocks behind his head. He doesn't know what time it is. Okay.
Oh,
Start again.
Sorry, I couldn't help myself. No, look, fundamentals. Where do they sit at the moment? Look, as much as I jest with Omar, he's right. There is so much ambiguity in the markets at the moment, and whether that's the Iran deal, whether that's supply in Q4, whether that's what happens with gas and how often that's replenished, whatever it might be, the Fed or inflationary pressures. There is what the market is trying to understand and is trying to value is what is that trigger point? What is that pivot point? That one bit of news that comes in as forecast, whether that is increasingly higher inflation, whether that's the Fed and even a more hawkish view that they've got. What is that one news article that we're looking for? The market is looking for what it does mean a sell-off, or it does mean that markets will ramp up. I'm not sure, and I think that's why we're in between a sort of $85 to $100 range. People are happy to be there, happy to trade around that. And you're right, a mere few years ago, when markets used to look at US EIA data as the sort of the weekly trading point, 8 million barrel build doesn't really garner a lot of interest. It used to, but there are much bigger things. And I think, as Omar said, and Albert as well, it's sentiment. Where is it? Is it selling interest? Is it outright selling? I'm not so sure.
Do you think there is a sufficient premium in the price or in the market to the fact of the fundamentals, i.e., idle capacity is down to very low levels, sub 2 million at the most. 5-year averages are well below inventories, global inventories well below 5-year averages. Mm-hmm. SPR at the 30-year low, etc. The bullish elements of fundamentals in the market, are they being represented, do you think, at $90?
No, I don't. I think that there's a lot more upside that needs to be priced into the market. I mean, it's very difficult when the participants are in the market are the funds, and people are piling into oil. It's very difficult for them to get off the recession train, which is what they're faced with come Q4. Look, there isn't enough. Long term, there is not enough investment in fossil fuels. And right now, OPEC can come out with an aggressive narrative in order to put a floor under prices. But fundamentally, the world is facing an energy crisis because of the lack of investment. And I don't think that is properly priced into markets yet. I think that there's between $5 and $10 a barrel. But how do you value it? How do you value what risk premium is worth? I don't know. But I think there's an upside here for sure.
Omar, we talked before about where the dollar is going, and perhaps it's reaching its ceiling. We saw it turn over a little bit over the last few days with regards to the euro, the position. The ECB took a big, I think, a record increase in terms of one move on the rates. Ultimately, does the dollar, if the dollar was to roll over, does that give a different direction to the market, take it out of its limbo posture?
I mean, the dollar is interesting, but I don't think oil trades, with or against the dollar. So I think the dollar index topped out at about 111, something like that. I think it needs to correct, go down to maybe 108, but maybe 104, 105, call it. And then from 105, it sets one more new high, in our opinion, close to 115. So I think there's more. I mean, it's very interesting. I think now you see these stories from Bloomberg and whatever, Euro has found its feet, GBP, Liz Truss and all the rest of it. So you get people to pile in and start buying the euro and the dollar a little bit early, so you can come and basically chop them off at the knees. So I think it's too early to sell the dollar. It's too early to buy the euro and the GBP. Now, if you're looking at longer term, if you can basically wait till the next low is in the euro down to 90, something like that, then it's a very, very good buy. I think the next move of consequence, in other words, is going to be an up in the euro to connect the massive down that we've done. GBP is a little bit different. I think GDP is going to help, but bottom line is, short term, you're going to see basically the euro and the GBP go up, but I think come off after that. But if you look at it at one more degree, I think we're looking for one more new lows than new highs. On oil, I mean, what I'm trying to explain is not is the short term. In other words, the oil market, in my opinion, has basically topped in that, we're not going to see another 130 before we basis WTI, before we see 60. The question is, how do you position for that? Do you start selling it now? 50-50. So it's not a good entry point in terms of buying it. Again, very, very short term. Are we going to bounce before we go down again? So buy that bounce before we go down. Again, 50-50. So I think the broad picture is sell rallies on oil until we get to about, $60, something like that. Big picture. Smaller term, shorter term picture, guess 110, sell it 74, 78, 75, something like that, buy it. But I think the broader kind of picture is debt is massive. Interest rates are increasing. How the government pays back this debt is clearly unsustainable. The UK is borrowing another 150, 170 billion pounds. This capping of energy prices means that basically there's no incentive for people to save anything, because everything is if the price is capped, it's like a buffet, right? It's all you can eat, one price. So what are you going to do? I know when I go to all you can eat kind of fixed price buffet, I just load up. I don't
allow myself to go to those places anymore. I'm barred. Albert, looking at the world beyond October 16th and where China may go in and be that sort of demand center of great significance again for the oil markets and for all commodities for that perspective. There's an increasing debate, expectation nearly, that China will back away from its zero COVID policy once this Communist Party Congress is over and all the political manifestations are completed. Your outlook for that, the world beyond this big meeting in mid-October?
Well, yeah, there's not going to be any immediate change in the zero COVID policy. That would be face losing. But over time, I think everyone is betting on a relaxation of the COVID restrictions. But that's only one piece of China's future. I mean, that's impacting manufacturing and logistics, right? But the broader global implications from inflation and high energy costs are having a knock-on effect on Chinese manufacturing that will extend well into next year. It's going to further soften demand for transportation fuels and for Chinese consumer products, right? That are going to, that's going to continue to produce softness in the Chinese economy. So, COVID, manufacturing, GDP, and of course the property sector, it's all kind of converging here on a set of problems, all within a kind of a unique identification and a unique set of solutions that the government will have to address one by one. It's going to take about 2 years by people's estimates here to work through all that until demand begins to approach steady state levels, pre-Ukraine, Russia, and pre-COVID.
Is there, just to follow up on that, Albert, going again into this meeting with Xi and Putin and so forth, obviously going into the meeting in February before the Olympics, the Ukraine invasion hadn't happened, so there was no need for President Xi to express any sentiment towards that because, you know, he was none the wiser like the rest of us, perhaps. But on this occasion now, he does have the full picture, as we all do. It's a very different optics for him going into this meeting from that sort of staying on the fence posture that China has maintained, although obviously somewhat supportive of Russia, but staying somewhat on the fence on some fundamental issues like weapons and other areas of overt support. Does China change that on the fence posture? Does the people, as much as one can sense within the context of the general noise on social media in China, are they on the fence? Are they on either side? Where do they, going into this meeting again with the optics so different than 7 months ago, what would be the expected posture? More neutrality?
Possibly more neutrality. Look, they've obviously taken a hit on their broad support for Putin and Russia in terms of their bilateral relations, particularly with Western economies, Western countries. So, I mean, that has been a negative as a result of the February meeting here with Putin. Let's look at this from another direction, though. Let's consider that Vladimir Putin's taking a huge risk going to Samarkand this week in light of the developments in Moscow yesterday. Yeah. It means something when a group of leading citizens in Moscow publicly put their face and name on a record that says, Mr. Putin, it's time to resign. Right? So, yeah, that will be dealt with brutally probably in the coming days, but is that a one-off event or is that the tip of the iceberg? Because you're asking for the seminal event that's really going to change the global markets here. And I think really you have to look at Russia and the Ukraine and say, what would happen if Russia were to say, look, we've had too much of this, we're disengaging from this, it's not doing us any good at all, right? And there's some kind of settlement with the Ukraine, and then the markets return to normal in terms of crude oil flows and natural gas flows, and that's a big change. So
well, certainly if President Xi added his name to that list on that note, that would certainly change the goalpost quite dramatically, I would say, hence the on the fence bits. No, of course not. But ultimately, the sentiment of you know, as they say, the interpreting the post-meeting readout, is it, oh yeah, it was great, we love each other? Was it a little bit more nuanced? Matt, coming back to the magic pot that is Kepler with its window on the micro of shipping movements all over the world and such granular data that's just so magical for all of us to have an insight on. Are you guys seeing anything in splicing that apart that is indicating where things may go? Shipping rates are higher, lower, traffic is busier. We're hearing that tankers are taking longer to come back from Asia and so forth.
Yeah, look, I mean, it's trade patterns are shifting, and they have done all year. They have done since the end of February. If you want a case study, you look at India and what they're doing with Russian crude oil imports. July 2021, they imported 3.2 million barrels of Russian crude. In July 2022, they imported 36 million barrels. So it's just oil is still moving, right? And it's the problem is that the world is breaking apart. It's fracturing even more. I know we've always had issues. You know, Venezuela and Iran, you know, the issues there with the shipping fleet. If you now add into Russia, you know, that's a sizable percentage of energy that is going to move into what we call the dark fleet, which isn't, you know, it's not going to be accepted into EU, UK, Canada, US. They're not going to import sanctioned material. But the growing economies, the majority of which are sitting in Asia, you know, India, China to an extent, Singapore are still importing Russian fuel. None of this is hidden. This is all public knowledge. All you're doing is you're just fracturing the world. So you've got one part of the tanker fleet that's doing really well. In Euronav are doing well. Frontline Navigator, record earnings. They're making hay while the sun shines. They really are. But then you've got the other side, where it's not reported and no one really knows what's going on.
And is that likely to grow? That their dark piece as a percentage?
It's inevitable. It's inevitable. It's these are incredibly hard to track, but we're having to adapt as much as the global energy market is. It's as great as our system is, we're still looking to ways of improving it, and of course, it's only going to get harder when the world becomes that much more opaque. So, look, it's fundamentally, to me, regardless of what's happening with freight or what's happening with tracking, I don't think Europe has a clue what's going to come during the winter. Even Jon Snow wouldn't be able to answer that question, to be honest. But it's no one really knows. And whilst everyone is still kind of a bit warm in the UK, give it 6 weeks when you come to turn your boiler on, and that gas is that much more expensive. I don't know. I don't know what happens there, and I think that's why the markets are so on the edge, on this precipice of where it goes and how it gets there, how far it does go eventually, is that no one really has an understanding yet of what it all means. And we're keeping an eye on it as much as everyone else is.
Let's go to the survey question and give the room a view here. So this is the setup for the meeting between Xi and Putin this week. What do you think they say to each other 7 months on after, hello, Vlad, hello, Xi, whatever their accents might be? They probably speak with translators. But is it a high five going great, Vlad, Xi, geez, brilliant? Or is it Vlad, what the beep? I did have an F there, but somebody told me to take it out. So it's what the... Or 3, China staying on the fence. 4, Xi, please send some guns. None of the above. What do you think any one of those captures the sentiment of this meeting, of these two very, very significant world leaders who, unlike other world leaders, don't have to answer to anybody, and so consequently are all powerful and consequential? So what's your view? Which of these do you think captures the sentiment of this meeting? Omar, week ahead, obviously, more volatility. I mean, to the extent in which you could speak to you and your peers observing, had obviously a very good first half of the year. Generally, it seems, we've had Mike Muller on here last week saying, listen, a lot of people are staying on the sidelines here because there's just too much volatility. We've parked our profits from earlier in the year. We're going to just stay out of this. How much of that is going on, do you think, and the consequence of that?
Yeah, I mean, Vitol are basically very good at optimizing. But anyway, let's move on from Vitol and what they do. So basically, look,
but just the market as a whole. I mean,
I think basically, let me just pick up on, because Matt was very right, and I think there's a bit of delusional kind of thinking, right? So over the weekend,
I would say Matt was very wrong, because he's saying nobody knows what's going to happen. I think it's very clear what's going to happen.
No, listen.
It's going to get cold and people aren't going to have enough gas. It's going to be really expensive. What's there not to know?
But it's worse. I think basically people are expecting at some point a reverting to the mean, that, everything's going to be okay. Russia's going to give up. Everything's going to go back to normal, right? So this credit Swiss report is saying that in Germany alone, 2 trillion with a T, $2 trillion of value added depends on 20 billion with a B of Russian gas. So the translation is that Germany takes 20 billion of Russian gas and uses that energy to make stuff and sell it and whatever, and turns it from 20 billion to 2 trillion. That's gone.
That's a nice
forever.
margin.
Exactly. The West, and forget the US because it's coming. But I've been talking about this tsunami for a very long time. The US is far away. If you remember the Great Depression, you know where it started? In Europe. And then it moved across. So it's coming. But if you look at Europe, this nice margin is gone, not just for today, but forever. Bye-bye. No business model. Okay, so the fact that Russia's going to give up and everything's going to be okay and all this kind of stuff, forget it. 20 billion to 2 trillion, you can forget it. They're going to be uncompetitive, highest electricity prices in the world. If you look at the U.S. government paying for just the interest on their debt, that's now the highest it's ever been. Not surprisingly, because their debt is the highest that it's ever been, and interest rates are going up. All recessions, depressions, whatever, usually start when debt is massive. So, so all I'm saying is, longer term, we are gonna, somebody's gonna blow this big bubblegum bubble, is gonna blow it up, and it's gonna stick to some faces. So it just depends on when. I think it comes to Europe first, and then it comes to the US second. But
that certainly you would think that the dominoes to get there are falling in an accelerated fashion. Whether they get there in the immediate winter, we'll have to see. Albert, China is coming to the end of a year. Obviously, we're moving to the fourth quarter, in which clearly it's going to be a second year in a row of declining oil imports, which hadn't happened for 30 years when it happened last year for the first time. Now it's the second year. Does swallows make a winter or make a summer, or whatever the summer, I think it is, the saying goes, one winter, one swallow doesn't make a summer. How should OPEC Plus interpret 2 years in a row of oil imports into China declining? Are we getting close to peak oil demand in China?
Well, I think OPEC would be smart to open coal mines. That would be the first reaction. And there's good money in coal. No, it's not a peak oil indicator. It's a uniquely Chinese issue. And again, I think it will resolve over the next couple of years. But those oil import declines are more a reflection of the softening of demand in transportation fuels. Power generation is being met by a variety of sources. It's only one, but I think it's the transportation sector that's really driving down demand for oil imports.
From the point of view of the price sensitivity in China, I mean, we have an economy in transformation from heavy industry to service and consumer. Where do we get from 15 million barrels and higher? What drives it higher? With a declining population, an economy that's changing from industrial to service, where do we get the growth from?
Combat would be one.
Combat?
Combat, yeah. Requires a lot of fuel.
That's an unfortunate demand source.
I mentioned 2 weeks ago, when the going gets tough, the tough go to war. So it's a bit facetious, a tongue in cheek here. That's a good point. Declining population and economy at a kind of a sustainable level and shift from to consumer consumption. That shift is not occurring.
No.
The consumers are not rescuing China's economy. The property sector is not rescuing China's economy, and they're not being allowed a chance to do that because of the COVID movement restrictions.
Well, we do note that overnight, a record, I think it was a record number of Chinese fighter jets broke through the Taiwan airspace line, as they have been doing, just sort of challenging that line. 13 fighter jets, Chinese fighter jets. Let's give Matt Stanley the last word this morning with the survey result before we post it on social. China staying on the fence. High five is only 14% from this group, at least. That's interesting. Matt, looking forward, your thoughts week ahead from the point of view of anything out there giving direction to the market. We're getting closer to Obviously, we had the big interest rate hike last week from the ECB. The British have postponed theirs because of the sad news with the Queen's passing, but that's inevitably coming. And then the Fed a week later. Do these big sort of bumper interest rate hikes give any direction to the market, do you think?
I think it's, it depends what happens with economic data. GDP last month was out this morning in the UK. That's gone back to growth again. How fluid are the central banks in reacting to what's happening with economic data versus fiscal policy? I think that's what a lot of people will take away. I think just on this chat this morning, you've hit so many nails on the head. What happens to flat price, to crude oil prices when China do eventually start relaxing COVID rules? Because the rhetoric in the last sort of 3 months has been concern about demand. Now, China's still locked down. When that does relax, how much of an effect will that have on flat price with China possibly coming back? We haven't seen a great, we haven't seen a great deal of drop off in Chinese demand, to be honest. But when it does start opening up again and people want to travel, then it will really be an indicator of where things are going to go. This week, China's on a holiday today. I think it's all eyes on economic data still. I don't see EIA really being a factor, as I mentioned earlier. And it's if prices do drop quickly, then I'm waiting for Prince Abdulaziz to come out with a statement that will kick it back up to $100. So it's just eyes on the headlines.
Okay, well, let's leave it there. Eyes on the headlines. Markets trading a little bit down this morning after the big bump on Friday. We'll see where the week goes. One would have to say and expect more of the volatility, plus or minus $3 or $4 every day, making it a very dangerous market to trade. Albert Stromquist, thank you so much for your words and insight today. Omar Najee, as always, amazing. Matt Stanley, thank you so much. Thanks for joining us. Have a great week, everybody. And make sure you beat the train to Fujairah for the 10th anniversary Energy Markets Forum. Isn't that an amazing photograph? That's through the mountains of Fujairah, the new railway line. Quite amazing. Going from Abu Dhabi to Fujairah. So that's cool. That was a pretty cool shot. All right. Take care, guys.
All right, thanks. Bye-bye.
Cheers.